Well, there's no question about it that capital preservation is more important than capital appreciation. Right now, we've got a bull market, but there could be a big bear market coming up down the road. So, in that kind of a situation, you always want to be worried. You want to be more concerned about capital preservation than capital appreciation. Now, having said that, the way to make money right now is to be on the long side. So, I'm long and nervous. Everybody, Courtney Smith here with our July 13th edition of Wall Street Winners since 1995. And there's our disclaimer, which seems like it's been there forever. Now, I need you to watch these charts very closely. There's some interesting interrelationships here. First, look at the S&P 500. We broke above the high that we made in middle of June. But we have yet to break the high we made at the beginning of June. But at least we got a little bit of a grinding bull market. But look at the purple predictor. The purple predictor is skyrocketing. The smart money is flooding into the S&P 500. The purple predictor is making higher highs. It's in a solid bull market, and it should drag the actual index to a higher level. But let's take a look at the Dow Jones. The Dow Jones has not surmounted any of the highs in June at all. It's much weaker. And our red box up there shows that there's actually a little bit more selling pressure than buying pressure. So the Dow type stocks don't want to be there. The place to be is the NASDAQ. We've been talking about this for months. We've been telling you where you need to be to maximize your profit on the upside. We go where the action is. We don't care where the action is. We just go where the action is because that's where we're going to make money. It's the NASDAQ. S&P looking pretty good. Dow not looking good at all. Okay, I need to break this down a little bit as well. So our top panel there is the stock market, and right now we're on a neutral signal. And we're not that close to getting a buy signal because we need to wait until September before we're allowed to think about buying the market. So here, but we can see that the purple predictor is dragging the indicator up, but still got to be neutral. Utilities starting to perk up. We took a stab on the long side a little while ago, a month or so ago. It didn't work out for us. We lost money on that trade, a little bit of money. Right now we're neutral. But if we can break above just the highs of last week, I think I want to start to get long utilities again. So we're pretty close to a bull signal here. We're in the bullish seasonal period, as seen at the top of the chart. And all we need is a technical signal to coincide with the seasonal signal, and we're going to be good. However, the seasonal chart from StockTradersAlmanac.com suggests that this is going to be the last little dip before the fall. So this suggests that we're going to sell off a little bit this week, 1 or 2%. The yield curve, nothing to say here that we haven't said before. The Fed is targeting the yield curve. Not much happened here in asset allocation, pretty balanced. Stock market risk indicator, also pretty balanced, not much going on here. Global shares look a lot like the S&P, don't they? Now, this is more important. Bonds broke to a new high. Now, the purple predictor has just been hovering at a high level, telling us that the smart money is really very nervous about the stock market. And as a result, they're just saying, you know what, let's go buy us some bonds. Those bonds look really good. You know, I need some bonds in my portfolio. And they're breaking out. Now, we're long bonds now. We're long the TLT. And a lot of it has to do with the fact that this is a hedge against another collapse in the market. So it's a good trade on its own. But if the market really starts to crack, we're going to make a lot of money on this trade. So it's a dual purpose trade. Bond key factors. Now, this was another thing that was quite interesting. There's a bull market right there. That means interest rates are going down. Now let's go take a look down here. And I got to break this chart down longer than normal this week. The green line down at the very bottom right, that's the Treasury note yields, very, very low. Right above that is a blue line, which are Treasury yields in Germany. And it's not very often that the U.S. Treasury yields are below the German rates. So with the German rates above the U.S. rates, that puts upside pressure on U.S. interest rates. The next thing is the chart itself, the black and red lines. That's the CRB index. That's a leading indicator of inflation. It's going up, putting upside pressure on U.S. interest rates. Finally, we've got gold, which has really been in a bull market since 2018. That also is a representative of inflation, and it's also suggesting higher interest rates in the U.S. But interest rates aren't going up. They're going down. And the reason is because the market believes that long-term interest rates should be higher. The market wants a sharply positive yield curve, which would be very bullish for the economy and very bullish for the stock market. But the Fed, being the academics that they are, which academics, that's just another word for saying they don't know anything, they, on the other hand, are controlling 10-year treasuries and keeping them too low and therefore delaying the rapid rise in the economy. Dollar really going nowhere. Who cares? All right. But, well, okay. When the dollar goes down, gold goes up. So that's why I care. Now, gold is in a sluggish bull market. We broke out of that long rectangle formation. I'm long gold right now. And I think this thing can go up to 2,000 an ounce without a problem. So I have a decent position right now. Of course, if you're a fully paid up member, you know we've got trades on. And I'm going to slowly increase my exposure to the gold area. We're not in any of the other precious metals because gold is the leader to the upside. Gold key indicators are now 2 bullish, 1 neutral. And even the neutral is slightly bullish. So this plus our proprietary indicator in the fully paid up section tell us we got to be long gold. Got to be long gold right now. Crude oil hovering around $40. Friday was a good day in the market here. I'm just going to say we're going to hover. Bitcoin, I've been getting more and more bearish here. The purple predictor broke to a new low. Bitcoin did not. But I think that the purple predictor, the smart money, is going to lead Bitcoin to the downside here. All right, be sure. I did another live webinar. We have a replay up, and I go into more detail. I update my whole strategy as far as the upcoming bear market is concerned. So send an email over to support@wealthbuilderllc.com to get the webinar replay. And I go into quite a bit of detail here, but really how to protect yourself, how to make life-changing money, why it's happening, when it's going to happen, and what you should do are all covered in this replay of the live webinar I just did. And of course, you'll hear all the questions and answers as well. So send an email to support@wealthbuilderllc.com. Get the link. It is all free, so you got to do it. You've got to protect yourself. All right, all you freebies, fully paid up members, hang on one second.